Hello everyone. Well, Mr. Bernanke certainly put the cat among the pigeons. His formal speech was dovish, as one would expect from him, but then during the Q&A session he suggested that the Fed could indeed taper off quantitative easing in the next several months if the data allowed. And things went wild. The tenor of his comments and the FOMC minutes were totally different from what other central banks are discussing. Most everywhere else in the world, central banks face below target inflation and two strong currencies, which put them in a neutral to easing mode. The Fed is one of the few central banks that's even considering tightening. This policy difference is likely to support the dollar going forward, in my view. The policy contrast is particularly sharp with Japan, where the Bank of Japan has only recently started on a course of super quantitative easing. In that respect, the collapse in dollar-yen this morning was a surprise. Apparently, the rise in JGB 10-year yields to the 1% level triggered a plunge in bank stocks, which spread to other interest rate-sensitive sectors, such as real estate, and from there to the broader market. The Tokyo stock market was down 7% in record volume as every single company in the Nikkei 225 average fell, the first time that's happened in 8 years. But why did the yen fall too? It's hard to imagine a flight to safety into a country where both the bond and the stock markets are plunging at the same time. What safety does that offer? What are investors going to do with their newly bought yen? I can only imagine that the FX move was triggered by investors who had been using yen to fund trades in other markets, such as Asia ex-Japan, and took profits there to offset their losses in Tokyo. Now, I expect that the Bank of Japan will step in to calm the bond market, as a rise in interest rates is exactly what it doesn't want. And that will eventually reverse today's movement. In that respect, I think this sharp move may be a good buying opportunity. In effect, the boat has come back for those who missed it before. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.